absolutely wonderful time to reconnect with old friends and to make new friends, and absolutely advance the cause of the IAA. Let's see if we can do this. Whoa, now you've seen all my slides. Okay, you just got a sneak preview since the thing wasn't working. However, what we want to start off here is to tell you, just in case you didn't know, that the IAA has got a new tool, Wordly. Now, these are the instructions. You can link to the app, and if you want to see or hear what's happening in a different language, you can do so. Just scan the code, follow the instructions. There's also the stuff on the doors. And you can do that. So if you prefer not to hear things in English, you can read it or hear it in another language. So great new technology that we have here. Now, this town hall session today is focused on one of the key elements of the IAA's mission. As you just saw, impact! We have spent a lot of time over recent years being internally focused, and I invite us all now to turn our minds to the value that the IAA can bring to the world and the impact that it can have. Now, everyone knows, I hope, that the IAA's mission is impact, assure and advance. So impact being to develop relationships with key supranational institutions, providing actuarial expertise on issues of relevance in global forums. Assure, supporting the development of the actuarial profession worldwide and promoting appropriate professional and education standards through member associations. And advance, promoting the advancement of scientific knowledge and the skills of the actuarial profession. And in addition, the IAA's vision is that the actuarial profession is globally recognised as leading experts in risk and financial security, contributing to the well-being of society. So, how do we bring this to life? Our mission and vision have a number of outward-focusing elements. And you may recall the IAA's 5-year strategic plan, which started in 2023, had the following strategic objectives, so outreach, engagement, awareness. So this again speaks to the IAA having an outward focus. The IAA is the voice of the international profession. The IAA is the face of the global profession, and together we achieve more. So, at today's town hall, we are going to focus on impact and hear about some of the impact that the IAA, member associations and individuals are having from around the world. So firstly, we're going to hear from 3 of our relationship management teams about the impact the IAA is having or plans to be having with some key supranationals. And next we're going to hear from some of our FMAs. Now, I know that all FMAs have got exciting stories to tell, but I've just picked 3, with also an update from the African Actuarial Development Academy, who also presented to us in Seoul last year. And finally, I'm going to move on to hearing from 2 individuals who I hope may inspire you to take up challenges and think about the impact that you could have. So right now, I'm going to pass to Ralph to hear about the International Association of Insurance Supervisors, or the IAIS.
Okay, welcome everybody. The IAIS, for those who are not familiar, well, the IAA is an association of actuarial associations. The IAIS is an association of insurance supervisory authorities. So it's just like the IAA in that respect. It creates model standards, it provides guidance to its members, and it looks at whether people are complying with minimum membership requirements and such. I'm going to focus on, well, I will mention 5 strategic objectives of the IAIS, but only talk about the first 4. I'll leave out discussion of the ICS Insurance Capital Standard. So first of all, on the climate change, what is the IAIS, objective on climate change, and where can the actuaries, and particularly the IA, add value? Well, first of all, the IAIS for climate change is currently focused on just the solvency implications. There are many other issues with regard to climate change, but again, the IAIS generally focuses on solvency and market conduct. It doesn't deal with pricing and rate regulation and such. So with regard to the solvency issues, one of the key challenges that they have is data. Do they have the data as far as what this all means? They also have to deal with local politics. For those who read anything in the news, jurisdiction by jurisdiction, the views on climate change and what should be done about it vary a lot. So the IIS dealing with the global impact of the various member associations, regulatory authorities and supervisory authorities, they have to deal with the local politics. And it's not just the politics that vary by jurisdiction, but the regional differences in hazard. For some, it's flood. For others, it's wildfire. For others, it may be cyclones, typhoons, hurricanes, or all 3 of those. And each jurisdiction has a different level of available resources. You go from anywhere, the major industrial powers, to those with very little resources, but similar problems with climate. How can the actuary community help? The data analysis, trying to make sense of what's going on with the data, which requires model building, scenario analysis. Along those lines, the IA had a climate risk task force that has already produced several papers to help out. But again, this is not purely an actuarial issue. Climate change is very much a multidisciplinary issue. So actuaries need to work with and are reliant on various other professionals and experts to be able to get the work done. So that's the climate objective. Next is AI. For those who've actually looked at this, clearly the first challenge is, what do you mean by AI? How do you define it? It's very broad and very evolving. At one end you have the ChatGPT and large language models, but you have other things that have been around for much longer. They also have a problem with, it isn't just the supervising insurer's use of AI, it's also the supervisor's use of AI. So they have to deal with both perspectives. And those are going to probably require different approaches and different work streams. And the learning curve and resources vary greatly by jurisdiction. There are some that have been dealing with this for a while and very far along, and others for whom this is brand new material and they don't have the resources to address it, in which case they'll be very reliant on the IIS for assistance and help. And actuaries can help here with regard to explaining the issues, educating the supervisors in industry, developing model standards, dealing with models and model governance, for example, and educational notes related to AI usage and model governance. In general, the feedback I've heard is the actuaries are perceived to be farther along on this than for climate issues, for example. But I'm sure Ray might have some disagreement with that. I'll let him address that. Okay, so that's the AI. Next, there's the protection gaps and related resilience issues. For protection gaps, the IAA mentioned it with regard to the pandemic issue, but for the IAIS, the challenge is nat cats, or natural catastrophes. Those hazards and perils vary greatly by region, so one size does not fit all. Part of the issue is identifying what caused the protection gap, because the actual causes can vary a lot by hazard and by jurisdiction. So the solution has to fit the local culture and laws. As one example, in some cultures, they don't really believe in insurance. So it's hard to have insurance be the solution if they don't believe in the product in the first place. So it is a very complex issue. And related to that, it's not even clear whether or not insurance has a responsibility to address or fix the problem. Is it an insurance problem or is it a government problem? And there's also the issue of, well, sorry about that. The issue also of whether you should address with the issue with post-disaster funding, or whether you should be focusing on pre-event mitigation. Because one of the problems is it's very clear that it's cheaper to avoid the losses in the first place than to try to fund them after the fact. So the IAIS can help by framing the discussion, providing scenario analysis, aiding in product innovation efforts, and to continue to raise that focus on pre-event actions. And then finally, relatively recently, they've created a project at the IIS dealing with structural shifts in the life insurance sector. One of the questions is, what does that mean? Their actual consultation paper defines that as the use of asset-intensive cross-border reinsurance. In other words, people using reinsurance for regulatory arbitrage, moving the risk to the places where it's in the perceived best interest of the person selling the product, which is questionable whether it's in the perceived best interest of the policyholder or not. They also have an issue of the movement of the sector into alternative investments, higher risk, yielding assets. There's not clear definition yet of what the challenges are because they haven't really finished their investigation. As such, where actuaries can help, there's also the issue of where can we help, because if we have to wait until we see how the problem is defined. The IA's Insurance Regulation Committee is currently reviewing the related consultation paper for potential comments. So that's my discussion of the IAIS. And I'll pass it along.
That was fantastic, Ralph. And now I'd like to introduce Marika, who's going to be speaking about the OECD.
Good morning. Good morning, everybody, and thank you, Bazana, for giving an opportunity to share some insights about OECD. Obviously, collaboration with OECD spans through multiple topics and teams, so I would not be able to cover them all, but I will try to give some short overview about some strategic projects we have together. I think it would be useful to explain what OECD is, and I apologize in advance if for some of you these are obvious facts on the screen. The Organization of Economic Cooperation and Development, OECD, spans 38 nations around the world. It has been informally called Club of Wealthy Nations before. As you see, it covers most of the EU and North America and Israel, Turkey, New Zealand. It has expansion plans to South America and Eastern Europe. And sometimes it's also called the World Tax Organization because of the role it plays in development of tax policies of member states. It's important to know that those social and economic policies that OECD develops, they are not laws, they are not binding, but governments of member states, they're bounded to promote those policies in their respective countries. So it's kind of a compulsory voluntary organization. And it also happens that sometimes countries request from OECD some help in developing some policies with topics they encounter some problems. So I will provide only high-level overview. We'll try to outline some future areas of cooperation maybe, and also maybe some areas of improvement in our mutual cooperation with OECD. So we established formal relationship with OECD. It's based on memorandum of understanding, valid for 5 years. So it's it allows us to have joint events, researches, participation, and mutual events. But it's not just a piece of paper. We do have working collaboration with people from OECD, and even this little presentation actually was impacted by the contribution of one of our peers, who became very excited when he heard that I'm going to pitch for the collaboration of IAA and OECD. So that's the truly developing friendship. But what is there for us, for IAA as an organization? So the participation in OECD activities helps us to promote and raise the profile of the actuarial organization, like in different areas of public policy. And given the focus that OECD develops its policies based on evidence, and these are data-driven, so there is an opportunity to position us as a reliable partner in all the questions or topics that OECD is dealing with. And it maybe most important is that we have, as actuaries, have an opportunity to inform the public policies in our own countries when we collaborate with OECD. So what we are doing for that, we have 5 main areas for collaboration we are engaged. And I focus only on these 4 you see on the screen, and maybe, yeah, if you have time, mention the new area for collaboration, which is digitalization and insurance. OECD is interested in all 3 letters of ESG, not only in climate. So far, our collaboration was more informal. OECD people were reaching out to IAA asking for contacts of experts, and we are usually facilitating those. But given the expertise we have within our organizations and FMAs, I think we can do more and be proactive and engage in those topics and not just facilitating useful contacts. Water risk is, I think, the example of the best possible way of collaboration. And I hope we would be able to expand this kind of experience also on other topics. We do have in IAA the famous Water Risk Task Force, and representative of OECD is constantly taking part in task force meetings and introduces us to different conferences with speaking opportunities. So maybe the lesson learned here is that creation of the joint dedicated task force for the topic helps us to collaborate with the supranational organization in a more focused way and provide more value. In insurance governance, we provided our comments for the review of OECD guideline on insurance governance. We were tried to promote the value and need of actuarial expertise in decision-making bodies of insurance companies. So in general, it seems that maybe we are lacking that. So let's see if those comments will be taken into account. And also, OECD is working on the claim management guideline, where our feedback is expected. And IFRS 17 is also something that they would like to develop internally, and they are waiting for collaboration, but when the time comes, so there is no active engagement at the moment. Long-term care is my favorite topic, and I think it's also a good example of good collaboration, and I hope this particular topic will repeat the success of water risk collaboration. In IAA, we have a task force dealing with a statement of intent, which should be, I hope, approved soon. And Michelin was meeting OECD people just at the beginning of the year, and we got quite good insights for the project. So I hope this cooperation will continue in the future. You heard from Ralph that, and maybe you have noticed that many topics we are mentioning here, they are relevant across all the supras, including protection gap. And OECD has active projects on that, and we had several discussions on that topic, but in my opinion, we could do more here as well and be more proactive because we do have expertise. Again. The last but not least, it's a topic of digitalization and future of insurance. So OECD is looking how new technologies in insurance and more granular pricing is impacting insurance business and the consumer behavior. So we have expressed an interest in that topic before. So now we may contribute because that's the real topic for actuaries to deal with. So I hope I was able to give a bit of the overview how exciting this collaboration is. We have several members of the relationship working group in Brazil these days, so please reach out, ask questions, propose topics for collaboration, and thank you.
So thank you, Marika. And now I would like to introduce Raid, who's going to talk to us about climate and sustainability.
Thank you, Bazana. Hola. It is a great honor to have been named the initial chair of the Climate and Sustainability Committee, which is newly formed this year to advance the IAA's work in this really important area. So, we have not yet established which supras and which external organizations we want to work with. That's going to be a main topic of our meeting here tomorrow. And the issue that we have, which is a great opportunity but also a great challenge, is that there are many, many supranational organizations, if you've just seen a couple examples of, that are working in climate and sustainability. And we have limited time, limited resources. How do we maximize our impact? And how do we bring the best of those organizations to the actuarial community? It's a two-way street. It's how do we contribute to them, and how do they contribute to what we do? So we have to be very agile in our approach to this. We cannot have long-term, static, very rigid ways of doing things. So we're going to undertake a census of all these organizations that are working in this area and try to understand where we can add value to them and they can add value to us. And the questions we're going to ask is, what do we get out of these relationships? How do we want to interact? In some cases, we may write joint papers. In others, we may do webinars. In some cases, we may simply monitor what the organization's doing and feed that back to the FMAs. What value does that provide to our FMAs? What projects should we undertake? How can we leverage them? And importantly, who do we know at these organizations? You know, do we just cold call them and go to their website, you know, help@oecd.com or something? What do we do? So we're going to have to go through that process to figure that out. And we're going to create a group within the Climate and Sustainability Committee to focus on this, to carefully develop the list, group how much interaction we want to have with these folks. We hope to complete that work in June, present it to the EC, and then get to work. Now, to give you an idea of just some of the organizations that we may want to work with. We've obviously got several United Nations organizations, the Environment Program, the UNDP, which basically covers things like Sustainable Development Goals. There's the IPCC, which is a very important group that produces all of the scientific information that underlies a lot of our analysis of weather patterns, etc., but also deals with adaptation and mitigation issues. We got the World Health Organization that deals with issues like how are disease and pathogen patterns changing as the climate changes. World Meteorological Organization produces a huge amount of weather and other data that we have to ingest into our models. I won't go through all of these, but you can just see that there's a wide range of potential groups we could interact with, including the development banks in Asia and Africa, which are funding things like adaptation and investing in helping people recover from disasters and deal with the effects of climate change. Clearly, there's things like the NGFS, which basically is a group of banking supervisors and central banks that produces all of the scenarios that are underlying the ISSB reporting that financial institutions need to do. Those folks could perhaps benefit from interacting with actuaries to get their scenarios, for example, to consider more tail risk and more extreme event risk, as an example. So we can figure out how we can maybe work with them to produce better scenarios that everybody can use to support financial reporting. One last one I'll mention is PCAF, which is the Partnership for Carbon Accounting Financials. They're promulgating standards on how banks and insurers will quantify financed and underwritten emissions. And we've already participated in a consultation with them to help them understand the actuarial perspective on quantifying emissions that are either financed or underwritten by banks and insurers. So as you can see, there's a wide range of potential things we could do. So each of these organizations, and I must note, plus others that are not official supranationals but operate in areas of interest, like carbon markets. That's another area of potentially huge work opportunities for actuaries. They can benefit from an interaction with our profession, and our challenge is to try to tailor our approach to each one of them individually to gain the maximum benefit for the IAA given our limited resources. And that tailoring is very important because the things that each of those organizations can bring to the actuarial community may be very different. In some cases, we may have a one-off interaction to respond to a consultation. In other cases, we may have a long-term interaction to produce work products, papers, and other things. We have a good relationship with those organizations, and some of that has been due to the fact that we've attended the last 3 COPs, where all those organizations attend the COP conferences. Simon is here. He went with me to Dubai. I was in Azerbaijan last year representing you, and we meet those folks at the COPs, and we establish the relationships, and then we follow up with the folks to further those relationships. And one specific example that I'll close with of what I see as almost a excellent example of what we can do in the future was the partnership that we formed with the IPCC through the Climate Risk Task Force to produce a document called Climate Science: A Summary for Actuaries, where the IPCC Working Group 1 had a 1,000-page report full of information on weather and atlases and all kinds of things that was highly scientific. And we partnered with them to produce a tailored piece of work, which they wrote most of, not us, that was focused on what the needs of actuaries were in catastrophe modeling and other things, and then we were able to publish that as a joint project with them. And that's a really good example of how we can work with these supranational organizations in climate to bring this to our members, and they were interested in doing this with us because they wanted to get their work in front of actuaries who they saw as very valuable in the financial services industry to get their message out. So this was an example of where we could work with a supra to meet their goals and also meet our goals of bringing good information to our member organizations so they can be more effective. So we have a lot of opportunity, and we have a great deal of work to do. And I'm looking forward to developing relationships with these organizations and bringing a lot of this back to the FMAs, which you all represent. Thank you.
So thank you, Raid, and to all our speakers in that first panel. And now I'd like to invite our second panel up. We're now going to hear from a number of our FMAs. And the first one we're going to hear from is from Raquel from EBA, who's going to tell us about some of the challenges and opportunities that the Brazilian Association is facing. So please welcome Raquel.
Okay, first, good morning to everyone. I want to know how many Brazilians we have in the room. Okay, so just for you, eu tô na Globo. Okay, and now I'll ask you to take a picture with all of you. Can I do this? Okay, I'll make a selfie because I want to have this memory to be here talking to an international community and tell to Brazilians that, yes, we can do part of that and engage more actuaries. This is what I'm going to talk soon. Okay, just... Right? No, it needs to be a selfie. Good. Thank you for that. Now let me find my speech. Okay. Being part of an actuarial profession in Brazil has been one of the most meaningful aspects of my journey. Today I'm really, really excited to share a bit about how our profession is making a real difference, not just in numbers, but in people's lives. Well, here in Brazil, we are a continental country, as many of you have found out when you were planning your trips to come here. We have over 200 million people with the vibrant insurance market with over $100 billion in annual premiums and over $300 billion in reserves in pension funds. These numbers highlight the scale of our industry with a robust regulatory environment and innovative market practices. Brazil is a global leader in Latin America region. We also deal with deep demographic transitions, like all of you, and significant social and economic inequalities. Like many countries in Latin America, we face the challenge of an aging population, increasing life expectancy, and the need for sustainable social protection systems in pensions, health, and public finance. IBA, as we call here in Brazil, was founded in 1944. So we are an 80-year-old institution. And this is the institution that promoted the regulation of our profession in Brazil, which came to be in 1970. Currently, we are around 2,000 members, 1,873 full members. Well, one of our main objects was to listen to the members so we could know what they expect from us. And from that, we just got a lot of insights and mostly how to better communicate whatever we were doing. So now we have a best student per graduation class recognition that helps them to put on their CVs since when they are starting their professions, that they are a good student, an applied student, and that help them to get better jobs. Talented young actuaries, we create visibility to those preeminent young actuaries who are more engaged with profession and promote our agendas also. And also an annual prize for best actuarial paper. It also helps to improve the, share knowledge and share the opportunity to develop, create opportunity to develop new techniques and advanced techniques and be recognized by that. Well, regarding our challenges and opportunities. As actuaries representatives, we have been successful to establish a good relationship with regulatory bodies, taking part in committees and participating actively on public consultation for new rules. Recently, we contributed actively to the debate on a new solvency framework for pension funds and on criteria for setting discount rates in actuarial valuations. Two key issues for the long-term sustainability on retirement systems. Regarding healthcare, the criteria for annual correction in premiums is under revising with active role of IBA. As we have seen at regulation panel at Choco this week, Brazil fulfills Solvency II requirements but still adopting ORSA and IFRS 17 with local adaptations. Actuaries play a relevant role in this context. In recent years, EBA has increased its presence in public policy discussions, including the review of understanding by Superior Tribunal Federal, our maximum federal court, contributing as amicus curiae in lawsuits, and that will generate repercussions on claims disputes and law application. Still, we face important challenges. We need to increase the visibility of the profession, bring more actuaries into emerging areas such as data analytics, ESG, climate risk, and public finance, and strengthen our institutional voice in Latin America. Beyond that, at the judicial proceedings, not always as for actuarial forensic analysis, asking many times for accountants or economists to do so in an actuarial manner. We have been visiting several courts to help them to understand the difference. To support our initiatives, we currently recognize actuaries in many ways, as best students, talented, I have told that on the prior slide. And the most important, we listen to our members. I think this is the main thing we have been doing the last few years, just to show them that what they think, what they want to do through the Instituto Brasileiro de Atuária matters, and they have a voice. When one of our members came to us and told us, hey, why don't we have a mentorship? We just called her up and said, okay, you want to do that with us? Let's do it together. Now we are going to our 3rd year of mentorship program. So that's how you engage people. Just ask them to be part of it and do what they think that should be done. Because we know we count a lot on volunteer work, right? The collaboration with IAA comes in hand to improve knowledge and bring opportunities of growth in Brazilian professionals, such as colloquial opportunity. It has been great to have you all here and show to Brazilians how we can be part of this world profession, you know. Well, our profession is essential to address the risks and uncertainties of a changing world. At AIBA, we are committed to making the actuarial voice heard and to use actuarial science to build a more resilient society. Well, thank you very much.
Thank you very much, Raquel. It's so interesting to hear about what's happening here in Brazil. And now I'd like to introduce to you Preeti, who is the president of the Indian Association. I had the privilege earlier this year of representing all of you at India's Global Conference of Actuaries. And I was so impressed with what is happening in the Indian market and just really how big it is and the challenges and opportunities they have from their side. So I can't wait to hear from Preeti. So over to you now.
Good morning, everyone, and thanks a lot, Vozena, for inviting me to share some of the insights from the Indian market. So, before I get into the details of the Institute of Actuaries of India and what we are doing, I just thought I'll give you a brief macroeconomic context of the Indian scenario. India is in a very unique yet dominant position in the world map. We are seeing the fastest growing economy in the world. We are at the 5th position now, but I know that we're inching close to taking over. Taking over and coming to the 4th position. We are seeing we are very bullish about the growth that we are looking at in the Indian market, and the GDP growth, the real GDP is around 6.5. And there is a lot of positive vibes there in the country, primarily because of the consumption infrastructure and investment. And I was hearing in one of the investment forums that they are talking about India as being the biggest investment asset class in the world. So that's the kind of sentiment that we are seeing. We have favorable demographics, but there are certain things that are sort of, we are behind in some of the areas, and those I would think are the opportunities for us to grow and show value as actuaries. The median age continues to be 29, but we also know that by 2050, we would have at least 20% of the people over 60 years. There is a high protection gap in India, and it was interesting to see from the previous, all the previous presentations, that there are certain common themes that are emerging. You're talking about protection gap, you're talking about long-term care issues. I think the issues remain the same, it's just the manifestations vary from one country to the other, depending upon our demographics. Having said that, the penetration in India for insurance is extremely low. It's just about 3% of GDP. So clearly there's a lot that needs to be done there. Now I would like to talk a bit about the institute. So I talked about the macroeconomic aspects of India, not a bit about the Institute of Actuaries of India. We were also founded in 1944, as similar to Brazil, but we were founded as a society, and we became an institute under the Act of Parliament in 2006. And currently we have about 10,000 members, still growing, very confident that we will continue to grow even higher. And while we look at the supply side, we are also conscious that the demand side also needs to be sort of somewhere balanced in that sense. So I would just like to talk about the Trinity over here. And if some of you have been reading things about India, there was a huge gathering of pilgrims in India early this year, where you had about 600 plus million people take a dip in the holy river in 45 days. And so I just thought, I drew inspiration from there, and I thought there are three dimensions I want to talk about. One is, of course, the innovation. We all know, we're all talking about personalization, we're talking about hyper-personalization, where more and more products have to be aligned to what all of us want. And when that happens, you know, there are certain things around both design and delivery of the products that need to be personalized, which cannot be done without AI, which cannot be done without digitization, which cannot be done without understanding human behavior. So this is an area where I think actuaries, and especially even in the Institute of Actuaries of India, we are focusing on. The second dimension is collaboration. We heard earlier in the earlier sessions where you're talking about collaboration across different organizations, collaboration across different professional bodies, within the country, collaboration across different actuarial bodies across the globe, and collaboration with policymakers. So given the complexity of today's challenges, I'm pretty sure that none of us can sit in our own rooms and in our own homes and solve the problems. Obviously, it has to be a collaborative effort. The third one that I would like to talk about is value creation. We all might think that you know, there's a lot that we can do, but unless the stakeholders see value in that, you know, it just can go only that far, right? So in value creation, I would talk of just two things which you might have heard, some of you might have heard about before. One is insurance for all by 2047. And protection, social security for all by 2047. What is the significance of 2047? 1947 is when India gained independence, so that is about 100 years. And that is why the policymakers have very strongly called out that, you know, this is an area that we can work on. Now, I will just talk about two case studies and on how we feel that there is something that we have worked on. First one, we'll talk about the health protection gap. The second one will be about pension protection gap. Health protection gap, as I said, the penetration of the insurance is very, very low in India. And you just have about 15.2% of population in India is covered with any kind of insurance. And you will see that, you know, about 75% of the population continues to actually use you know, their own out-of-pocket expenses to be able to meet the needs of their medical needs. So with that in mind, what has happened is, the government has launched a very ambitious program called Ayushman Bharat, which is sort of translated would say that, you know, you want health for all in India. Bharat is the Indian name for India. So with that in mind, there was a program launched which talks about a coverage of about 6,000 USD per family per year, pre-existing conditions from day one, and total of 1,900 plus procedures that are covered under this scheme. And it actually has 120 million families and 550 million beneficiaries which are covered under this scheme. There are a few details I have put here in terms of the funding options, which I will sort of just leave it for you people to maybe read later when you will share the presentation, because I'm conscious that I have little time and the ticker is on. So, so what we essentially did there was that, what is the purpose of this scheme? Purpose of this scheme was three main aspects. Population coverage by way of eligibility to most vulnerable segments of the country, service coverage including high-cost services. Third was the financial protection by lowering out-of-pocket expenses. So this really was the theme of the entire program. And when you talk of role of actuaries over here, clearly if these programs are not sustainable, they just die their death. And suddenly one realizes that there's a huge amount of pressure on the government in terms of costs. So how do you make sure that they're actually sustainable in the long run? So what we did was that actuaries looked at the data frequency and the right package rate, etc., helped in arriving at burn costs, which is the basis of negotiation with the insurance companies to make the scheme more sustainable. This moved from the government typically looking at the claims at one side and the exposure at the other side, and the twain never talked to each other. So we helped make sure that they actually talk to each other and come up with sound, using actuarial principles, sound models through which the sustainability can actually be monitored, and you can tweak the whole thing. Now the second one I talk about is the pension protection gap. You see, even in pension, over 90% of the country is unorganized sector. You have only 6% of people covered under the private pension plan. So there was a huge amount of opportunity there. And then you saw that there is a scheme called an Atal Pension Yojana. Yojana is again a scheme in Hindi, which aims at covering a lot of people in the unorganized sector. Some of the statistics you have over here. It is a defined benefit in terms of contributions being given by the subscriber, but it's a defined contribution in that sense, but defined benefit because of the fact that the individuals get a fixed pension which is covered by the government. Quickly, last slide on how we actually worked as actuaries. We help cover the entire gamut of the whole life cycle, going back to our familiar actuarial control cycle. We looked at the adequacy and sustainability of the scheme, looked at data, assumptions, both financial and demographic, looked at the models, looked at the cash flows for next 25 years. And these are all ongoing things where we are actually supporting the vision of insurance for all and social security for all by 2047. Thank you. Okay, sorry, I'm just intruding on the next speaker's time. This is an open invitation to all of you. Our next conference, the Global Conference of Actuaries, which Bozena talked about, we are celebrating the 25th year. So it's a silver jubilee year. I will reach out to all of you. I would request all of you to actually come back with papers, thoughts, so that we are able to showcase the global collaboration in its true sense. Thank you.
Thank you very much, Preeti. I am so pleased that India has been able to join us today, because they certainly are such a huge part of the world's population, and it's important for us to be taking what's happening in India into account. And now I've got another fantastic FMA to introduce. So we are going to hear from the Actuarial Society of Kenya. And as you all know, we've got the Tokyo ICA coming up next year, but 3 years after that, we have the one in Kenya, and many of you may have the opportunity to visit the Kenyan Actuarial Society at that time. So I would like to introduce Makami, who is here with us today, and also I believe we have Lorraine, the task president, joining us online. So I'm going to pass to Makami now to kick the session off.
Bom dia, and welcome to this session. Lorraine Njue, our president, sends her greetings from Nairobi. I don't know if she's able to say anything, but I'm Mukami and I'm part of the council at the Actuarial Society of Kenya, and I'm very privileged to be able to tell you a bit about our FMAA. So, our assertion, which we will be looking to prove to you in the next 10 minutes, is that in under 2 decades, Kenya's actuarial profession has evolved from dependence to influence, shaping local systems and inspiring continental agendas. I'm sure half of you already agree. So, Kenya's task was actually registered in 1993, but we launched in 2005, and that's where we're using the 2 decades analogy. We now have 120 members with actuarial credentials. Very proud of that, amongst a population of over 50 million. How did this happen? I'll tell you a bit about the history. So, in 2000, the first class of actuarial science began at the University of Nairobi, of which I am a humble alumni. In 2005, task was relaunched, and in 2008, I think that's when we joined the IAA and started having our actuarial conventions. We also hosted the first IAA Africa Congress in Nairobi during that year. In 2012, something revolutionary happened, where the regulator in Kenya, the Insurance Regulatory Authority, launched a scholarship program where they would take 5 students to the UK each year and support them to their exams. A lot of the actuaries currently, including our president, are beneficiaries of that program. Fast forward 2025, we have 120 members, and we are planning to host our second convention in Mombasa, and also to have a conference at the Masai Mara in June. And of course, fast forward to 2029, where you will be telling the story. This graph at the bottom is very interesting. Again, just looking at the trajectory in the last 6 years, phenomenal growth in the number of actuaries. So this has not been without challenges. And I am a risk actuary, and the symbol for risk, they say, is both danger and opportunity. So I will ask us to look at this slide in that context. Yes, we have a low actuarial to population ratio. When I qualified, I think I was saying, 1 in a million is the number of actuaries. Now it's 2.4 in a million. I think South Africa have 30 in a million, which is probably where we want to go. This is a challenge, but it also presents opportunities for the actuarial professionals to rise up to the forefront of the industry and markets, and I'll give you examples of that. Data scarcity is something I don't have to speak to a room of actuaries, but IFRS 17, for example, has come out to support that. Limited public awareness. I actually had to convince my parents to let me do actuarial science. As I said, it wasn't something that they knew about, right? And we also have now a lot of students getting into the profession without enough knowledge, right? So we really have to support the infrastructure. Last but not least, global talent drain. We love the actuarial profession, wide and wonderful and global, but it then allows people to move out of Africa, right, when they train. And my colleagues from ADA will probably come into that a bit more, because it's not only a Kenyan problem, but it's something that we've been able to tackle, especially with the IRA, who've been very successful in bringing back the students they actually sent to the UK and retaining them in the markets. Yeah. So how is TASC responding? And when we say TASC here, we look at TASC and its members, including all the institutions that our members are part of, including the regulator, including the rest of the industry. But there's a really great ecosystem, including mentorship, where we actually try to grow experience. We have a lot of students, as I mentioned, the ratio of students to actuaries is at another level, engaging universities, and really strategic alignment, including us trying to get an actuaries bill in Parliament, which we expect to come out in the next couple of years. Impact, Vozina mentioned. How can 120 members with actuarial qualifications make an impact? We've actually been really privileged to see a lot of actuaries gain accolades outside the financial services sector. So we have this award called Top 40 Under 40. And given our population demographic, it also is representative in the actuarial profession. And almost 10 of the actuaries in the market have gotten that award. We recently had one recognized as top 25 most influential Kenyans this year. The second box in the middle is one we're really proud of, where a task member formed a startup called Pula, which is covering lots of farmers around Africa and has also gotten New York Times sort of most influential people award, right? The Nairobi Declaration for Sustainable Insurance is something that a task member who works at FSD was very instrumental in pushing for, right? And there's a lot also we do on the policy side. So 120 actuaries can have a great impact. We're also very proud of our diversity and inclusion, both from a gender perspective and also from an age perspective. And that's something that I think we continue to look at with our first female president and even first female actuaries over the last less than 10 years. Now, exciting stuff, looking ahead. So I hope I've proven the first part of our session where we are shaping local systems. So we now hope to inspire continental agendas and, learning from, I think, ASA, who have already hosted an ICA. We're very proud to be able to invite the global actuarial profession to Kenya in 2029. We actually have a theme already called Impacts, Insights, and Inclusivity. So hopefully that will be something quite exciting. Some of the things we've done already are coming up with our logo. And of course, we are very focused on, Tokyo 2026. And we are looking forward to being there. But also looking forward to this and getting engagement around our logo, which we hope some of you can also participate in and on. Yeah. So again, we don't underestimate the local, African, and global impacts of hosting the ICA 2029 in Africa. And yes, that's the teaser of what else you can do when you do visit. But we also are really pleased with the engagement we're having with the IAA, especially with the strategy towards working with Supras and so on and so forth. So we're working with the IAA, including with the International Association of Insurance Supervisors within Sub-Saharan Africa, to actually upskill the regulatory sort of practice in Africa, so that when we come to ICA 2029, we actually have tangible examples of more improvement in the actuarial profession in Africa. So we're really looking forward to this journey with you all. Into my last slide, which is our call for action. Yes, we are doing well, but 120 is not enough actuaries. We really need support as we continue to build our capacity. As we collaborate, we are joining a lot of the IAA committees and so on. We actually are leading the Inclusive Insurance IAA committee, and we hope to engage with the IAA then. Of course, ICA 2029, a lot of your organizations can sponsor and support us. So we look forward to that. And you're also welcome to our 10th actuarial convention in Mombasa this year in October. So thank you very much.
So thank you very much to Makami and to Lorraine, who was able to join us on screen there. And now, in keeping with the African theme, I would like to welcome Yesterday and Yvonne from the African Actuarial Development Academy. We actually did hear from them in Seoul last year, and it'd be great to have an update. So over to them.
Good morning, everybody. Continuing on with the Africa team, I'm talking about the African Actuarial Development Academy. Let me make sure. We introduced this last year in Seoul, and this is just to give you an update of what we've been doing since then. For those who aren't in Seoul, I'll do a little bit of what is it. So it's an academy and looking to develop and bridge the gap for actuaries in Africa. Mukami has talked about 120 actuaries in Kenya, but one of the stats we typically use when we go out is we say there are about 2,000 actuaries in South Africa and about 200 in the rest of Africa. So if you have about 100 of those in Kenya, imagine what the rest of Africa is looking like. So we're all trying really hard to emulate South Africa and possibly Kenya, looking at that journey along the lines. So yes, it's about bridging the gap. It's about increasing the number of actuaries. We recognize that if the actuaries are, if there are more actuaries, it impacts on the growth of the economy, impacts on the countries, and then we have this thing where, you know, as a continent, we're getting better. We also realized at that point in time that there were a lot of things that were happening in pockets on the continent, and we wanted one area in which we could kind of harness all the different things that people were doing together in order to share them with other parts of the continent and to be able to grow that across the piece together. So that is some of the things that as ADA we are looking to do. We had 4 pillars which we had in mind: mentorship, professional development, educational development, and tutorials, just to see how we can get our actuaries up and running very quickly. So we started off this year. We had what we like to call a fireside chat. The first one was with the MD of Africa, Dr. Karakaisi, who is going to be the host for ADA. And this was more or less talking about empowering actuarial excellence. This is the employer's view, talking to the world. What does it mean to have an actuary in your team? How can they help you as an actuary? How can they help grow your industry as well, given it's a reinsurer? Then we had the second one, which was, I thought, one of the good ones, which was an actuary becoming a CEO and telling us about his journey. So this is about you taking your technical knowledge and then also transferring it into business and being able to be a P&L person, growing that business, employing people. So it's about saying what are those skills that you have and how are they transferable into other things. That was really, really fantastic for us. I think overall we had engagements of about 100 people online. We're a virtual platform. Our aim is to be totally virtual. We're not going to do anything physical. And diversity, because we want to be Africa, we also monitored how widespread is our communication. So we had about 19 countries, participants from about 19 African countries join us. We had about 20 other non-African countries join. So we were very keen to see that we were spreading the message far and wide. Then we started looking at mentorships, and I think some of my panelists have also mentioned mentorships. Because some of the things we find in Africa is because of the distinct scarcity, if you become qualified or have a couple of papers, you rise very quickly. And everybody sees you, like, I'm UK qualified. The first thing, if you ask, are you an actuary? They say, what type of actuary are you? You go, oh, I'm a pensions actuary, I'm a life actuary. In Africa, you are the actuary. No distinction. Nobody cares whether you did pensions, general, risk, you are the actuary. If I can afford to pay you, you can pretty well do everything. So we recognize the fact that given the way the training is, there is need for you to be upskilled in other aspects. So mentorship is one of the things that we put on. So we have the group mentoring, which Wise gladly did for us. We had 15 people again on that. We were looking for people who had 5 years experience or more. And we had about 8 countries represented. Again, we wanted diversity. Then we looked at the mentors, and we did a call for mentors on LinkedIn, and we thank God for LinkedIn in our lives nowadays and social media, because it allowed us to go very far and wide. We ended up with about 34 mentors. When we looked at the diversity of our mentors, we had about 6 African countries, those resident, but when we looked at those who were not resident and our diaspora network, as I like to call them, we were able to get about 14 African countries, including people who were non-African as well, looking to help us with this. So please, when we do the next round, sign up. but I'm sure you'll hear more about that as well. But that's about just giving back, and I think please don't be shy in giving back. You know something the people don't know. We will give you a session on cultural, to get you aware of the cultural differences and the nuances of working with people in Africa. But the fact that you're online, you can share your knowledge, it's so much better than anything else. So please do volunteer when we ask as well. Then we started looking at other pillars, which was our professional and educational development. We want to say thank you to the CAS because they gave us the PNC Actual Foundation course, and we were able to offer this to members across Africa. Again, we were looking for diversity, so we have, and a small cohort, so 9 countries, 15 people. They're on a course to give them the fundamentals of PNC, and that's kind of our way of giving back to those, because if you find out that you are in your company alone and you're struggling, and when you attend some of the international events, the problems they're dealing are so very high level, you're lost. So what we are trying to do in ADA is kind of try and make this very specific to Africa as well. And then remember I talked about the educational piece. One of the things we're looking at is how do we make it easier and cheaper for people to qualify on the continent. So we're looking at university accreditations. So at the moment we're working with about 6 universities, 2 in Nigeria, 3 in Kenya. You can see Kenya is going really far. And 1 in Zambia to help them on their journey towards accreditation with some of the international bodies here. Then we also want to do a little bit of advocacy. We have to go out and talk to people and tell them what ADA is about and raise funds. We're still in the fundraising phase, so please, anybody with money, we are looking for you, please. Any hands? But as you know, money is needed, and we do need to say thank you to the IAA for being supportive throughout in everything. They've given us a lot of support, not just financially, but also helping us and talking through us through some of the issues. And I will say thank you to some of the other majors, and there's some people here. We can't say thank you enough. There's a Japanese, Kenji, who is on top of us for a lot of things. So we say thank you to that, to him on that. But this slide is just talking about us going out there and having conversations about what ADA is doing across the continent to be able to grow the visibility and be able to bring resources to us. Resources is not just money, it's your time, it's your expertise. We value all of that at ADA. Then this is my last slide, but I think in this slide what I wanted to talk about was where are we? So with all these activities over the last 1 year, we have been able to touch 1 person in at least 26 countries. That's almost half of Africa. In my opinion, that's, you know, fantastic. If you think about it, from the IAA, you only have about 6 full member associations, 9 associate associations. I think Tunisia is the only one that's a member that we've not found somebody. So if there's anybody from Tunisia here, please sign up for the next ADA event so that we can be sure we've touched Tunisia. But the way we're thinking about this is how do we ensure that in our virtual nature we are reaching most of Africa. And then the last thing I didn't say, which I should have said earlier, was we're supposed to be English and French, right? So on the fireside chat, the next fireside chat is going to be exclusively in French with an English translation. That is going to be interesting. We tried English with a French translation, that didn't work, but we're doing exclusively for French this time round. So please, our aim is to be inclusive as much as possible. So thank you. I'm going to hand over to Yvonne, who's going to talk about some of the people that have been impacted by ADA and some of their stories. Thank you.
Okay. Thank you, Yeside. Ooh, okay. You don't get to see the people's faces, unfortunately. But yeah, thank you, Yeside, for taking up all my time. But I'm going to touch on touch on some of the people that have been impacted by ADA. And I'm going to start with Abena Fokor from Accra, Ghana. You can see half of her face, unfortunately. I'm not sure what's going on with the pictures. But so Abena is a brand new actuarial analyst that has just started her career in a small consulting firm in Ghana. And she's also a participant in the PNC basic course that we have just started that Yeside talked about. Thank you, CAS.
She's actually always one of the first people to sign on to our weekly Zoom calls for the mentorship calls. She's also one of the first people to ask questions, and she's very interesting to watch during the sessions because we have these Kahoot quizzes, and she'll be jumping off her chair and throwing some fist punches when she sees that she's on the leader. Okay, the leaderboard. Yes. So she says of Ada that the opportunity to learn from experienced actuaries, ask questions, and receive tailored guidance has made a real difference. And it's encouraging to be a part of a network that genuinely invests in its people. So as Yeside has said, that we try to make sure that we're tailoring what we're doing to the African people, and clearly she's seeing that. The next person that we want to just touch on, oh, you can't see her face, is Dr. Mbanga Lombe from Lusaka, Zambia. So she's a university professor at the University of Lusaka, and we've been helping them to regain their accreditation with the IFOA, but also see if they can get more courses to be accredited. And sometimes it's just helpful to have somebody there to support you and take you along the process, even though it's things that maybe to other people seems obvious. So she says about that ADA support feels like a partnership, amplifying local efforts, bridging gaps, and connecting us globally, and helping to build a stronger, self-sustaining future for the profession in Africa, which is exactly what we're trying to do. And I'm going to wrap up really quickly. Thanks, Yeside. The last person I wanted to profile is Edmund Ngongo, who's actually a Dutch qualified actuary that spent most of his life in Switzerland, but has Cameroonian heritage and is based in the UK. So from all over the place, and he represents the diaspora that Yeside was talking about, that, you know, we just have people that come and join us from all over the place. So he actually came across ADA through an ActiveView replay of one of those fireside chats, was really, really excited, contacted us on our website and was like, how can I help? And I'm so pleased to say that he's now one of our mentors in our upcoming Pathways to Success program. So, you know, this is the sort of person we want to reach. And I love his quote. He says, ADA is the dawn of a new era, igniting growth, empowering actuaries, and turning Africa's insurance dream into reality. So I'm just going to end with this slide, just encouraging you to sign up, come talk to us. Myself, Yeside, will come here over here, introduce us to your friends with deep pockets so we can raise funds, and join us in our mission to catalyze the development of the actuarial profession in Africa.
Thank you very much to Yeside and Yvonne, and sorry to have to cut you off there, but we have to watch the time. So now I'm going to pass to the final part of our agenda, which is to hear from two of our individuals who have made a real impact. So from Frank and from Winley, I'm going to ask you to come up now, and then I'll be asking Frank to speak first and tell us about the difference that he has made in his exciting career.
All right, I got it. Ok. Sou homem baixo, asiático, de meia idade, com cabelo preto e vestindo terno preto. So I said I'm a short, middle-aged Asian man with black hair wearing a black suit. And the reason I do that is it's an inclusive thing, and that'll be a theme for some of the things I talk about. It's a thing I learned here in Brazil that they do. I think it's really cool. Here's my CV. I'm only going to go through part of it because it's not super interesting. One thing is, I didn't take exams until I got my PhD. I was 30 years old when I took my first exam. So the actuarial profession is the best kept secret. And that's, I am here by sheer luck, right? I'm not here because we have done a great job advertising to people. Folks don't learn about this profession until later. So I'm very passionate about the IA's mission. I'm passionate about all of us and the work that we do to let folks know actuaries exist. One thing I didn't put on here, in 2007, I received an offer to go to Apple to work on their warranties. So iPhones, you name it, they have warranty insurance. I'm glad I didn't. If we were talking about impact, I could have gone there and been a great warranty actuary. I think the stock they offered me at the time is worth somewhere between $2 and $5 million. But I wouldn't be here in front of you, because instead I chose to stay and finish my exams and go to Google. Google hired me because they had 3 really difficult insurance problems. One was warranty. Another was they had a captive insurance company they needed help with. And the third was a credit card product that they were building. So I went to Google because it was a bigger scope, and I thought, maybe I'll have a bigger impact here. Shortly after joining Google, I went to join Uber because Uber's insurance problem seemed so much harder and so much more difficult. And so I sought that challenge, and I'll talk about that shortly. So here is my boss, Gus Foldner. This guy is incredible. He can read a 30-page document in 10 minutes and retain almost all of it. So he's a legend, but he had a very difficult insurance problem. So one, in 2014, Uber did not have regulations around the world. There was no written regulations, so that's difficult. The most difficult thing about no regulations is there's no insurance requirement. So you need to have a regulation that has a defined insurance requirement. Then you need to go and get someone to sell you that insurance. You need to build that insurance product. So he's crisscrossing the country. He's met all 50 of the insurance commissioners. So the NAIC meetings, he goes to all of those. And then he repeated that around the world when Uber expanded to other countries. We came up with an NAIC model law. So that's the National Association of Insurance Commissioners. That's the sort of the commissioner group in the United States. And the model law had an insurance requirement in it that was informed. While he was crisscrossing the country, I would get phone calls all day. It would be questions like, how many cars in Texas carry physical damage? What is the average and median bodily injury limit carried by people in California that buy insurance? So I was doing all this research 24/7 to feed him, because he would give me deadlines. He's like, you have 6 hours to give me this data, otherwise I don't need it, because I'm meeting with the senator or the commissioner or whatever assembly is deciding these things state by state. And then we had to repeat that problem when we got the model law, because we had to buy insurance from someone, and there's no insurance product on the market. So he was talking to the Farmers CEO, he's talking to different insurance companies and their executive suite to try to convince them to sell us something. And then we had to provide all the data to those companies in order to build that insurance. So I'll tell you, what's impact? Without this work, there would be no Uber, there'd be no Lyft. We did all the heavy lifting. Lyft wasn't in any of these conversations. We did all the heavy lifting for Lyft, because they just didn't have that kind of scale. They didn't have a person like Gus. So with all this work, we now have ride sharing around the world. So a less interesting guy. One of the interesting things is I hired actuaries at Uber. I have about a team of 35, but I've probably hired 100 actuaries over the years at Uber. And all of these other tech companies would start poaching. At one point, Gus said, stop building a farm system. You got to retain your folks. We're not building actuaries, training them so Lyft and DoorDash and everyone can hire them. But I want to show you the peak. The peak of pride for our profession in tech is when Elon said this at an earnings conference call. He said, I have great respect for the actuarial profession. This is 6 years after Gus said that actuaries were key. He's jumping on the bandwagon. Come work for me. We need actuaries, revolutionary actuaries. And this was on a public conference call when he was reporting earnings in 2022. Going back to some lessons, okay, I talked about inclusion. So how many people have heard of the phrase code switching? Okay, it's a DE&I phrase. So code switching is when you're among one group of people, and to fit in, you have to talk one way, and then you go to another group of people and you got to talk another way. because you want to fit in there. And so I've learned to talk in memes. This is a meme that used to be popular where you put 4 squares about what different people thought about you and what you do. And so there was a lot of code switching. I love the top right one. This is what I encountered when I first went to Google. People said, "What are you doing? Why does Google need an actuary? Are you even an actuary? Like, do you know insurance, bro?" Like, I get that from a lot of senior actuaries. I'm like, yes, I'm an actuary. I'm a fellow. I'm qualified. I did reserving at Google. I did pricing. I do a lot of actuarial work. So why is inclusion so important? I had to figure out what my tribes are. There's no tribes, but that's an opportunity because in tech, they don't know what I do. So I could tell them, all right, give me your problems. I'm happy to take a whack at them and see if I can solve it. There's a lot of ambiguity too. They don't know what your role is, and they don't know how to work with you, and you can tell them, look, actuaries solve problems. Give me a problem. Either I'll give you a good lead on how to solve it, or I won't, but it's an opportunity for you. So you can ask questions. And you have to get used to that. You have to get used to, I think, what Yaside said, which is you're the actuary, you get to do everything, right? They hired you. Like Google's hiring an actuary for the first time, they expect you to do everything from risk management to quantification to sound bites, you name it. Going to data scientists real quick, this is a very popular term. So there are many companies that have actuaries where the data scientists outnumber the actuaries by 100 to 1. And they just value data scientists so much. You have to survive, which means you have to talk to the data scientists. All politics are local. If you don't talk to data scientists, they don't know who you are, they don't know what you can do, and they don't know your commonalities. And then finally, once you start solving problems, you have to scale. And besides all politics being local and you needing to talk to everyone, all roles are political. So in order to scale, you really have to figure out what's in the head of the people you're talking to. What does your executive need to solve, and solve that problem for them. So that's it. Thank you.
Thank you very much, Frank. That was fantastic. I'd now like to introduce Winley To, who is going to talk to us a bit about her experience in cyber. Welcome, Winley.
Thank you. Thanks, Bazena. I don't have any slides, so you just have to put up with my dulcet tones today. So by way of introduction, I'm Winley To. I'm a general insurance actuary in Australia with Taylor Fry Consulting. I'm also the current president of the Australian Institute of Actuaries. So I'm really delighted to be asked to share my journey, a cyber journey, and how I went from knowing literally nothing in cyber to within a year appearing on national TV as an acknowledged expert talking about it, on radio regularly, to advising boards and even helping the Australian government in their counter-ransomware initiative. Okay, so my story starts just over 3 years ago. The Australian Actuaries Institute is always thinking about emerging risks and how we can, actuaries can provide thought leadership in all these new areas. So they're always thinking about things, space or this or, you know, whatever. And on this occasion, 3 years ago, they thought cyber, you know, is really a key risk. The landscape's always changing. No one knows anything about it. So they said, is anyone interested? Oh, I'm Uber now. That's all right. Frank. Is anyone interested in doing research in this area and doing a green paper or a report for us? And, you know, I was armed with nothing but curiosity, and I said, oh, I'll do it, you know, really excitedly, from having a full-time job as well. It was quite foolish doing this from a standing start and knowing just about nothing. The interesting thing is the landscape. I mean, I kind of really regretted it after I started putting my hands up, but I'd already promised. And so, you know, I couldn't let the whole society and all our membership down. So every time I thought I got my handle on it. It's a bit like what you find, you know, with analytics. The landscape kept changing. You know, there was a new risk, a new kind of software, a new thing emerged here and there, and I couldn't quite put my handle on it. And I call it kind of like my baby, because even though it was meant to take like 3 to 4 months, and the Actuaries Institute were getting quite sort of antsy about how long I was taking. It actually took 9 months from go to woe. And, you know, I've got twins, and they only took 8.5 months to come out. So this was longer. It was torturous, but it was worthwhile. Now, the irony of it all is that the day that we released the paper, our paper on cyber risk and the role of insurance and what it means, and the impact, it was exactly the same week. I think it was within 2 days we had the Optus breach, which is a big telecommunications breach in Australia. And barely 2 weeks later, we had the Medibank breach, which lost about 10 million members' personal health data. It was a really big deal. It was really big news. And the media was scratching around going, where's there an expert to talk about this? And it was like, oh, conveniently, here's a ready-made actuary, you know, to talk about cyber risk. And it's kind of fortuitous, I guess, that everything happened in the same week that we released our paper. So I think it was meant to be. Yes, okay, so my opinion was sought in the papers, I appeared on live TV. It's not something I ever want to do again, because I was asked things like, do you think the police are at fault? Or, you know, and I'm thinking, oh, how do I, you know, I've done some training, you know, the institute gave me half an hour of, you know, media training just in case I'm asked silly things. And I was like, oh my God, how do I pivot from this? You know, so I had to give this, it's a very nuanced approach and so on and so forth. So soon after this, you know, boards came seeking my advice on cyber risk and role of insurance, and the government, you know, started knocking on my door as well. So sometimes I ask myself, how did an actuary get to have an impact in a brand new area where we're neither IT nor security experts? You know, I didn't even know what antigenous SOC seams. I thought SOCs and seams were like, you know, our socks and stuff, you know, not stacks of things that protect us. So how you know, what did we offer in our report, our paper, what I was saying, that gained such traction, you know, compared to an IT expert, for instance? And I think the answer is because we're actuaries. It is our actuarial training, you know. It gives us this unique skill to connect the dots. And by that I mean, it brings together, our training gives us the ability to bring together different viewpoints, different data sets, different perspectives. You know, in a world that's so polarized and has, you know, different opinions, we have this skill set to cut through the jargon, bring together this information, synthesize it from a range of sources, and solve complex problems. So, you know, that it's purely our actuarial training. So just going back to the paper, what was in it? How do we approach it? So when the team and I started to sink our teeth into the research, we found the various players approaching it in their own way. So the government were really concerned. They wanted to help big corporates, but they were unclear how big corporates were dealing with cyber risks. So their solution was to, I guess, have more and more increasingly onerous penalties, which our paper called out, you know, probably more diplomatically than the word I'm about to use now, is sort of one-dimensional. You can't just impose penalties and hope that, you know, people will do the best things. And boards of large companies, they were staying awake at night worrying about, you know, what's happening with cyber criminals and tech. They were scared by the technical language. And what they were doing, a lot of these large companies, were throwing big dollars into their CTOs and their CISOs, their chief information security officers, to build bigger and bigger and bigger walls and stronger walls. And we all know, you know, walls do leak and people can climb them and stuff, rather than building resilience. And they didn't really understand what the risks were, really, when they were throwing these dollars at their CTOs. And then SMEs, small and medium enterprises, they were just busy staying alive and running their own business to really worry about the dangers underneath their bonnets. So we found everyone understood their areas very well, but no one came along and connected all the dots. So the value we added as actuaries was seeing how all the different areas come together. So we collaborated with all. We got governments talking with large business. We got everyone to talk to insurers. We got small businesses involved. You know, insurance at the time, actually, to be honest, 3 years ago, wasn't that valuable. There were heaps of sub-limits. No one understood what it covered, and so on and so forth. So it was really important as well for insurers to listen and to talk in this area. And with large companies, the big thing we did for them is to draw attention to the financial and non-financial risks. You know, not just the costs, the direct costs of remediating a breach, but the indirect costs such as the lost business from reputational issues, reputational damage, and senior staff redirecting their focus to cleaning up breaches rather than from business development or strategy, and the impacts in revenue to the longer term. So it's really a bog standard financial projection model, I guess, which was now applied in a new area to companies across all areas of industry, not just insurance. In the end, our report had 6 clear recommendations for boards and industry and government, not just to look at, but to action. They're really pragmatic. And I'm happy to say that all of these have been or are being acted upon in the past couple of years. And these include things like from addressing skills gaps to board training, and evaluating cyber risk, not just as a technological risk, but as a business risk within like a more comprehensive risk framework. To wider discourse on accumulation risks, our papers encouraged all this, and cyber acts of war, to really rethinking and busting a lot of myths on cyber insurance and more. So please, do read the paper. We didn't stand still after doing the paper. Since then, we've done a lot more with government and business on this risk. I've met policymakers from all over the world to discuss a counter-ransomware initiative by invitation of the Australian Government Department of Home Affairs, and the paper that was put together, or the guidance that was put together, was presented in Washington towards the end of last year. We've done a follow-up paper on cyber protection gap for SMEs. That also got radio coverage as well, and press coverage, because SMEs are severely lagging behind. Large corporates kind of get it now, what the cyber risk is, but there are more and more and more attacks on smaller companies. You just don't hear about them. If big companies get attacked, everyone hears about them. Am I finishing? Okay, last minute. So this is an exciting journey. The key learnings, I have 3 from this journey, I'll just say it. Curiosity and a knack for research is something we all possess as actuaries. So I encourage you all through your careers to tap into these skills and seek out opportunities to find expression for them. And you'll have a really supportive, willing community behind you. Secondly, we work best as actuaries when we engage outside with the wider community. I spoke with incident responders, IT experts, cyber insurers, lawyers, software, government, small businesses that got attacked, large, so on. Draw on their expertise and generosity. So building community and nurturing networks is really important for us as a community. And last but not least, as actuaries, we speak this shared, very valuable evidence-based language that can bring different people with different skills and different viewpoints together to solve complex problems. And I see actuaries doing this every day in all the different fields that they work in. And I believe that we can do more of this in the future and make an even bigger impact on the world's most pressing problems like inequality if we truly understand the powers that we have. Thank you.
Now, thank you very much, Winley, and to Frank too. And I'm sorry I've had to cut a few of the speakers off, but it is important that we'll get to tea break in a minute. But just to summarise what we've heard this morning. So we've heard, to start off, about some of the needs of the supras around actuarial skills and the opportunities for us to assist. We have also heard about some of the exciting challenges in Brazil, India, Kenya, and Africa more widely. And we've also heard from 2 actuaries who have each accepted their own challenges and taken a different step. And now, as we approach the next few days of our council and committee meetings and then return to our home associations, I challenge each of you to think about how you can make an impact and how you would like to see the IAA and actuaries impacting the world. So please enjoy the rest of your meetings, go and enjoy the morning tea now, and we'll have a great next few days.